Hello, dear students. Welcome back to the Management Accounting class. I'm Dr. Indraini Katti, and in this video, we are going to discuss small problems on the cash flow statement. That is, how about the cash flow statement is how we are going to prepare the cash flow statement. So these three activities are connected with the cash flow statement. What are those? So classification of cash flow activities are operating activities, one more is investing activities, and the third one is financing activities. So all together, what do we learn is operating activities. Due to operating activities, the firm receives cash and the firm is going to pay the cash, right? Cash inflows as well as outflows will be there. Due to investing activities also, cash comes into the business and goes out of the business, as well as the financing activities. Due to the financing activities, the company receives money, receives cash, and company also pays cash. So how about all these activities? In this video, I have cut shorted it and focused only on the operating activities. Okay, so let's go to the next slide. That what is cash from operating activities? So as all you have learned, what do you mean by cash flow from operating activities? So there are, the activities are there, different core business activities due to which the company receives cash, as well as company has to make the payment of cash. That is, purchase of raw material is there, it has to make the payment. It receives cash from the debtors due to the sale of goods to the debtors, right? So when it sells the goods, it receives the cash, and when it makes the payment of the maybe the expenses or the purchase of materials, etc., at that time cash moves out of the business, right? So here, let me go to the next slide, which focuses on Karnataka University question paper 2019. The question is asked for 5 marks, and what is this is you have been asked to calculate the cash from operations, right? A simple problem is given to you. And this is, there are two methods of calculating the cash from operations. One is direct method, one more is called as indirect method. And they will not give you, this is the indirect method and all. They will give the information. Looking to the information, we have to identify what is exactly it is. It is asked whether on the direct method or on the indirect method. So this problem is on the indirect method. What is direct method? Directly, they will give you cash received from the debtors, cash paid to the creditors, etc. Such information, expenses, incomes, information is directly given to you, wherein we need to follow the direct method to calculate the cash from operations. But if the information is likewise, what all are given to you? The current assets, current liabilities, the non-cash item information, goodwill information, depreciation, etc. When it is given to you, we need to go for the indirect method only. It means we start from the net profit, derive the operating profit. Okay, cash flow from operating activities. And in the income statement, the accrual basis is taken into consideration. That is, the company receives cash and the company makes the payment of cash. Sometimes the company has not yet paid, but it treats it has been spent, it has been paid. And sometimes it has not yet received, but it treats it has been received by the organization. That is accrual. Outstanding expenses and accrued incomes, etc. are there, right? So those are all taken into consideration in the preparation of income statement. Whereas in the cash flow statement, actual cash movement is taken into consideration. If the company actually received or if it has paid actually at that time, it takes into consideration, right? Accruals are not taken into consideration in the cash flow statement. That's why it is different from income statement. Okay, so as per the income statement, the profit will be, the operating profit will be different, and cash remained with the company will be different as per the cash flow statement. That's why both of them will not coincide. Okay, so let us look at the information which is given in the question paper. Particulars are given, calculate cash from operations from the following information. Okay, particulars are given here. The particulars, 2 years information is given, 1/1/2018 and 31/12/2018. So opening, it is all is considered as opening, it is called as closing. Okay, so what all are given? Let us see. Profit and loss, that is credit balance, that nothing but net profit, right? So profit, it is credit balance means profit and debit balance means loss. So 2,20,000 opening will be there, opening is there, and 4 lakh is closing. Debtors, opening debtors, closing debtors, bills receivables, creditors, outstanding salaries, goodwill, depreciation, and prepaid expenses. All this information is given to us. So let us go to the solution. How we are going to prepare cash from operations, calculate the statement, as calculate the cash from operations from the statement. Okay. So here, in this problem, current assets, current liabilities are given. Along with the current assets and current liabilities, what exactly is given is goodwill. These two are not current assets and current liabilities. So non-cash items, these two are called as non-cash items. So depreciation, goodwill, opening as well as closing is given. So how we are going to calculate? Let's focus on the solution. What is done here is calculation of cash from operations, the statement we need to prepare. 2 columns are there, 3 columns together. One is particulars, second one is adjustments column, and the third one is final amount, total amount column. Okay. So let us come to the initiation. That is, let's start solving the problem with closing balance of profit and loss account. What is the closing balance given in the problem? Profit and loss account. So what is it? How much it is? Closing balance is 4 lakh. So this we are taking into consideration here to start with. Okay. So closing balance of profit and loss account is rupees 4 lakh. So it is written here as 4 lakh. Next, what we are going to do is add non-cash and non-operating items debited to profit and loss account. So these items are debited to profit and loss account. When we look at the profit and loss account or the income statement, we do find the non-cash items and non-operating items which are debited, right? So those are all we have to write here, add. Okay. So what we are adding is non-cash and non-operating items debited to profit and loss account. So in this given information, what are those? I have just identified here, this is a profit and loss account item, first one. Second one, debtors, this is a current asset. Bills receivable, current asset. Creditors are current liabilities. Outstanding salary is current liability. Whereas goodwill and depreciation, these two are non-cash items which are debited to P&L account. And last item, prepaid expenditure, is also called as current liability. Okay. So current assets and current liabilities are there. Apart from the current assets and current liabilities in the problem, non-cash items are also given which are debited to P&L account. That's why we are taking here as a first item the depreciation. Depreciation is rupees 20,000 and goodwill written off is rupees 10,000. So let's look at how much it is given. Depreciation, 1,40,000 is given in the problem first year. Opening is 1,40,000 and closing is 1,60,000. The difference is rupees 20,000. So this we are taking for the calculation. And even goodwill, 1 lakh is there and 90,000, it is declined, that is written off. Written off is how much? From 1 lakh to 90,000 it is reduced. That's why written off amount is rupees 10,000. Is that clear to everybody? So these two are taken into consideration in the non-cash items. So we have taken here depreciation is rupees 20,000 and goodwill written off is rupees 10,000. So total, these two total is 30,000. This 30,000 is added to rupees 4 lakh. So the total comes to 4 lakh 30,000. Okay. So here we have taken as 4 lakh 30,000. This is the total when we add non-cash and non-operating items debited to P&L account. Less what we are deducting here. Less, come to this. Less non-operating items credited to profit and loss account. Here, debited to profit and loss account on the top, and next item is credited to profit and loss account. We have to deduct. So there are nothing, no items given in the problem which are credited to P&L account. That's why nil dash dash. So let's move on to the same. We are taking the same figure in the total and writing it as operating profit before. Look at this title, operating profit before working capital changes. Okay, so it means working capital items are given. What do you mean by working capital? Working capital is the excess of current assets over current liabilities. It means in working capital, current assets items as well as current liabilities items are taken into consideration. That's why here this 4,30,000 is the operating profit, but before working capital changes. Okay. Now we are doing the adjustment of working capital items, current assets and current liabilities. Let's come to the next step, that is add. What we have added here, decrease in current assets and increase in current liabilities. Due to decrease in current assets, the company has received some amount. Due to increase in current liabilities, also the inflow of cash will be there. Okay. Now decrease in current assets and increase in current liabilities, these two items are added to operating profit before working capital changes. So what are this? Look into the information provided. So coming to the earlier slide, yes, come to the debtors, whether decreased or increased. It is increased. Increased means we are not taking right now. Bills receivable, decreased. Yes, it is to be added. Okay. So bills receivable add, it is deducted. Okay. Now next is creditors. Creditors is current liability. It is increased. Yes. By how much? Add 20,000. It is added. Okay. Outstanding liability. Outstanding salary is current liability. It is decreased. It is not added right now. Goodwill is already taken. Depreciation is taken. Prepaid expenses, it is increased. It means we have to add. So what is the title we have written here is decrease in current asset is added. Increase in current liability is deducted. That's why when we looked into these two items, current assets and current liabilities, the difference, however, we have taken here as decrease in bills receivable, right? So what is the decrease in bills receivable? Look here, decrease in bills receivable 20,000 minus 16,000. How much is decreased? 4,000 rupees is decreased. And next we are taking the increase in creditors. There is an increase in the creditors also, that is 60,000 to 80,000. How much increased? 20,000 is increased. These two items are to be added. Okay. Now let me add first one, decrease in bills receivable rupees 4,000 and increase in current liability, that is creditor rupees 20,000. These two total will be 24,000. Add these two in the 4,30,000. When we add it, we derive 4,54,000. Okay. Now, next step is deduct. What you are deducting, we are adjusting here. Okay. One is add, decrease in the current assets, less what we are deducting, less increase in current assets and decrease in current liabilities. The reverse statement of the top one, right? What we have added here, decrease in current asset is added. Increase in current asset is deducted. Increase in current liability is added. Decrease in current liability is deducted. Okay. So here, therefore, what you have done is, now what we are doing here is, right? What we have done here is the increase in current asset and decrease in current liability. When we look at this item, increase in current asset, that is debtors, is increased by rupees 20,000. Prepaid expenses are decreased by rupees 10,000, and outstanding liability, that is outstanding salary, is also decreased by rupees 4,000. See now, let us see the problem. Increase in debtors. Debtors are given as 80,000 and 1 lakh. How much is increased? 20,000 is increased. This is deducted. And we look at the creditors item is already done. Bills receivable is already taken. Outstanding salary is decreased by rupees 4,000. We have to deduct this also. And prepaid expenses is increased 20,000 and 30,000. So this difference is 10,000. This is also to be deducted. So these three items, 20, 4, and 10. The same things we have taken here, 20,000, okay, 20,000, 10,000 and 4,000. Total of all this will be rupees 34,000. This is deducted from 4,54,000, right? So 4,54,000 minus 34,000 will be 4,20,000. The total is 4,20,000. What it is now? After doing the adjustment of working capital changes, that is increase and decrease in the current assets and current liabilities, we derived the operating profit as rupees 4,20,000. There is one more step. What it is? The last step, less what we are deducting here, opening balance of profit and loss account. How much it is? Opening balance of profit and loss account is 2,20,000. When we deduct 2,20,000 from 4,20,000, the net operating profit we derive, that itself is called as cash from operations. Cash from operations is rupees 2 lakh. Okay. Hope all of you understood this problem. It's very simple. The first thing what we have to do is, let me simplify this. The first step is closing balance of P&L account. Okay. That is credit balance. If it is credit balance, we take here, right? The next step is add. What we are adding? Add non-cash and non-operating, non-cash and non-operating items, which are what these are done, which are debited to profit and loss account. Okay, those are all added. And the reverse statement of this, less what we have to deduct, less non-cash items are not at all there, non-operating items credited to P&L account are all deducted, right? So this is, there is nothing in the problem. That's why dash is taken. Then we derive the operating profit before working capital changes. So in this, we have to do the adjustment for current assets and current liabilities. Okay, the statement we write is add. What we have to add here is decrease in current assets and increase in current liabilities. Deduct increase in current assets and decrease in current liabilities. Then we finally derive the operating profit after doing the working capital changes, right? In that, finally, we need to deduct the opening balance of profit and loss account. That's it. We derive finally cash from operations. Okay. So this is what is a simplified format of the cash from operations calculation. So if you understand, if you are able to understand what the current assets, what the current liabilities, what are the non-cash items. So usually depreciation, goodwill, these are the non-cash items, right? Goodwill written off and depreciation non-cash means there is no movement of cash from the company. Company will not receive any cash or will not lose any cash for this. That is non-cash, no movement of cash. Depreciation, for accounting purpose, we deduct the value of the asset, right? We deduct the value of the asset from certain percentage, that is we have provided for depreciation, so that it will help in the future period to replace the obsolete asset. Okay, so that is all. We have taken it as depreciation as non-cash item. Okay, I hope you understood this problem. And the next problem is very much similar, right? Calculate cash from operations from the following. This is also almost similar. The figures are different. So this is for your homework. The format will be same as it is. See, this is kept as a blank. You can practice with this problem, right? So profit and loss account, credit balance is given, debtors opening and closing, bills receivables are given, creditors are given, outstanding salary, that is a current liability. So for your sake, let me mark it up what these are all, right? So first one, what we do is the profit and loss account, closing profit and loss account. We start the problem with the closing profit and loss account balance, credit balance. And at the end, we have to deduct this 6 lakh from whatever we have derived, right? And here it is a current asset. Current asset, what is it is? Increase in current asset. Okay. How much is increased? That should be deducted. And bills receivables, it is declined. Decline. Okay. decrease in current asset, which is added, it is deducted. So creditors, it is increased, increase in current liability is added. Okay. And here it is decreased, decrease in current liability is deducted. So goodwill and depreciation, these two are non-cash item. Okay, non-cash items which are added, right? So that's why these two are added. Take the difference of these two and add it to the net profit, closing net profit, right? And the last item is prepaid expenses is a current liability which is increased. So increase in current liability, it is again added. Okay, it should be added. At the end, we have to deduct this 6 lakh from all these adjustments. So this 6 lakhs is to be deducted last at the last stage. And we derive finally cash from operations. If you do this adjustment, you will derive the cash from operations. I hope you will practice the same problem in your home, at your home. Okay, so do it, right? So next one, let me go to the next question paper, Karnataka University 2017. It was asked for 5 marks again. From the following information, calculate cash from operations. See, it is little bit different. How this is done is the goodwill and the depreciation is given in the additional information. Rest are others all are given in the table. 2015, 2016, 2 years data is given. P&L account, credit balance, plus balance. First year 15, next year 68. That 60, we will start the problem with either 68,000. So here, there are two things also. Instead of taking the closing balance of profit and loss account and deducting at the end the opening balance of P&L account, what we can do is we can take the difference, 68,000 minus 15,000. We can start with this difference. That comes whatever the difference we derive here as 68,000 minus 15,000 will be 53,000. So this is net profit for the year. How much is earned for the year is 53,000. Instead of taking closing and at the end deducting this 15,000 from that, we can start with this 53,000 only. Okay, net profit. We can take the net profit earned during the year is rupees 53,000. In that, we are going to do the adjustment also. That is add. Next step is what? Add non-cash and non-operating items debited to P&L account. So here, after doing all that, we need to look at what are the current assets, increase or decrease, current liabilities, increase or decrease. So the first statement comes. What is the first statement? Let's go to the problem only. We can solve it there itself, right? So let's move on to this. What is it? Let us start. Calculation of cash from operations. Do the statement. Prepare the statement with 3 columns. One is particulars. Second column is for the adjustment, rupees. And the last column is for the total amount, rupees. Okay. So here we will start with what is the first statement we have to write is net profit earned. How I have taken, instead of taking the closing net profit, what I have done is taken the difference of both the years. 68,000 minus 15,000. How much I have derived here is rupees 53,000. Am I correct? I hope it is 53,000. I hope all of you are following, right? Yeah. Next step is add. Do the adjustment related to the non-cash and non-operating items which are debited to profit and loss account. Okay. What are those? In this problem, only 2 informations are given. One is depreciation, one more is goodwill. See, tell me the depreciation amount, how much it is? It is, yeah. How much it is? Depreciation is rupees. How much? 10,000 at the end it is given here, down. And the goodwill is rupees 8,000. Same figures I'm writing here. Okay, write in the inner column. Depreciation is rupees 10,000 and goodwill is rupees 8,000. The total comes to 18,000. Okay, so this 18,000 is added to 53,000. When 18,000 is added to 53,000, It is 71,000. Okay. So this is before working capital changes. So this itself is called as operating profit before working capital changes. Okay. And let me write here, right? Okay. 71,000 is operating profit before working capital changes. Now in this, what we are adding is add. Come to the adjustment for current assets and current liabilities. What is the statement here? We have to write add decrease in current assets and increase in current liabilities. Let us look at this. What are the current assets and current liabilities? Okay, and decrease in current assets is added. Let's come to the first item here. It is increased. How much it is increased? 4,000 is increased. What is this? It is current assets. That's why if increase in current assets is there, that is to be deducted. Okay. Come to the next one. Bills receivable 26,000, 21,000. 5,000 is decreased. 5,000 is decreased means it is to be added. Okay. And creditors increased how much? 3,000. It is added. Increase in the current liability. Increase in the current liability is added. Decrease in the current asset is added. Okay, right? So look at the statement. Take the difference and write the answers, right? So let's come to the creditors. Look at the creditors items. What are those? Creditors are increased, right? How much it was earlier? 17,000. See, creditors 17,000 in the first year and 20,000 in the second year. That's why it is increased by rupees 3,000. So the same thing I'm writing here, 20,000 minus 17,000. Okay, 20,000 minus 17,000. The difference is rupees 3,000. Write in the inner column as a 3,000. Coming to the next one, bills payable. It is also the same case. It is increased, right? 3,000 was there earlier. Next year it is 10,000. So that's why 10,000 minus 3,000. The difference is 7,000. It is increased. Bills payable. Look at the problem. See the last item. Bills payable. How much it is? Earlier, first year, 3,000 was there. Next year, 10,000. It means it is increased by rupees 10,000. That is why increase in the current liability is added. Okay. The same I have written here as 10,000 minus 3,000 rupees 7,000. Look at the current asset. It should be decreased. Then only we can add. Decrease in the current asset is added. So how much bills receivable amount? 26,000 first year. It was 26,000. The second year is decreased to rupees 21,000. Decrease in the current asset is added. Okay, added. The difference is rupees 5,000. When you make the total of all the three, the total will be how much? 15,000. Okay, so this 15,000 is added to the 71,000. Okay, 71,000 and 15,000. Add these two figures, we will derive 86,000. Next step is, in this 86,000, we need to deduct some items. What are those? Less increase in current assets and decrease in current liabilities. The current assets are increased. Current liabilities are not decreased. There are no item in the current liability as decreased one, right? Only current assets are increased items are available in the problem. So how much increase? 34,000 minus 30,000. First year it was, debtors was 30,000. Second year it has become 34,000. That's why increased by rupees 4,000. Stock. It is, first year it was 34,000. Second year it has become 50,000. So therefore 50,000 minus 34,000, right? The difference is rupees 16,000. Okay. The total of these two is rupees 20,000. Write it in the outer column as 20,000. The whole amount of rupees 20,000 is deducted from 86,000. Okay. So when we deduct 20,000 from 86,000, we derive 66,000. So this 66,000 itself is cash from operations. So all the things, whatever you have learned are very much similar. The format, I hope you understood right now, how to calculate the cash from operations. Simple format, start with the net profit, closing net profit if you are taken, that's well and good. At the end of the problem, we need to deduct the opening net profit. Or else there is one more way, that is taking difference in this problem. In this solution, we have taken the difference between opening and closing. Closing is 68,000, opening is 15,000. The difference will be 53,000. This is the earned profit during the year, right? So here I will conclude the explanation of these two problems. I hope a little bit of things you have learned, right? So if you have any type of queries and all, feel free to ask it in the comment box, right? I'll be able to answer so that I can understand what is the thing you have understood and what are the doubts you have, right? Feel free to ask, and in my next video, I will cover all the three functions, that is operating items as well as investment items as well as financing items. It means complete cash flow statement as per the accounting standard 3. Okay, 1. So let me stop, say bye-bye. Thank you very much.